We are super excited to start and kickstart this session. So I'm Dunia Agarbi. I'm in the marketing team at ConsenSys, and I will be your guide for today's session. So the objective of this webinar is to bring together our network, our partners, some industry leaders to go through a really fascinating topic, financial inclusion, and how it can be advanced through digital currencies. So to do so, we have the chance to have a quite really great lineup of speakers that I'm going to introduce right now. Before that, I just want to note and to tell you two things. First of all, this webinar is going to be recorded, and you will receive the recording tomorrow, hopefully. And if you have like any question, of course, you can use the Q&A section, and we'll make sure that after the panel, we will go through some of them, of course. So don't be shy and feel free to ask any question there. I'm going to now share my screen and go through the agenda with you and introduce the speakers. So let's do it now. So again, welcome for all the people who are joining us. I can see more are coming. So the idea with this webinar, as I told you, is to go through the major opportunities and challenges when it comes to digital currencies for emerging markets. To kickstart the session, we will have the pleasure to have a fireside chat between Monica Tiger and Jean-Michel Godefroy. So Monica is leading our effort in South America, in South Africa, sorry, and Jean-Michel Godefroy is the former ECB director. So unfortunately, we will not be able to see Jean-Michel because of like a technical problem, but I will share a screen and you will see his headshot for sure. So thank you so much for your comprehension. This solid introduction will be followed by a panel conversation with Shelly Adinolfi, who will be our moderator, with Adeola Adetunji, who is the executive director at Wax Mobile, Catherine Gu, who is the global CBDC lead at Visa, and Albi Rodriguez Jaramillo, head of blockchain ecosystems and communities. And this session will be so we will close the session with some Q&A. So yeah, this is the idea. I'm gonna now we're gonna start. Let's start. So Monica, Jean-Michel, the floor is yours, and I will let you. So Monica, turn on your camera, and Jean-Michel, you can of course let the camera off, no problem at all. And I will let you kickstart the session.
Thank you, Dunia, and thank you so much, Jean-Michel, for doing this with us. I'm so excited. Jean-Michel and I have been working on this topic for a while, and the truth be told is we only have 15 minutes to talk about this. If we could talk, I think, for hours, because I think that two of us are very fascinated by this debate and this conversation about financial inclusion. Whenever we talk about central bank digital currencies, comes up. Why? Because there are many studies that have said that there's at least 1 billion people that have been left out of the financial markets economy in one way or another. Why? Because, as you know, to open a bank account is expensive, it's complicated, you need proof of address, you need an ID, and many people in the world don't have proof of address, they don't have a ability to have identity recognized by an official government, and that means that many people in the world have been left out. But now with this new technology that has come to the world, we know that finally we can make things better. We also want to concentrate in this conversation, because we really only have 15 minutes, with the amazing topic, which is, I think is fascinating, is the conversation about Africa. Many of you, I don't know if you know, but in Africa, because the banks did not have the right infrastructure, what happened was that the telecommunication companies created an infrastructure that enabled payments to take place, mobile payments, mobile money. And what we're going to be talking about is what role do we think is going to play a telecommunications company in Africa when the various central banks start implementing central bank digital currency. So this conversation assumes that central banks will implement CBDCs And then what is the role of the telcos and how are things going to change in Africa and other countries in the world? And who better to have this conversation with than the most knowledgeable person that I can think of, which is Jean-Michel Godefroy, who was the head of payments at the European Central Bank. And now he is totally super passionate about this topic. And welcome, Jean-Michel, and thank you for doing this for us. And to start, I want to ask, in which way do you believe that that this new CBDC can foster financial inclusion in Africa specifically, and specifically in the countries that already have mobile money? And I would like to hear your views. Thank you.
Okay, thank you very much, Monica. And I apologize for this technical problem which prevents you to seeing me. I mean, you see my picture, but this picture is almost 20 years old, I'm afraid. So it's a bit like cheating, but sorry for that. I think what is important is to understand, we are working on CBDC, but it's important to understand that the world has already changed at least 10 years before CBDC, because the financial inclusion, which was largely a dream, say 15, 20 years ago, it has come to reality to a large extent, not only in Africa, but also, for example, in South Asia. In South Asia, it has taken the form of branchless banking, which is a prolongation of the traditional banking activities. In Africa and in other regions of the world, it has been more mobile money launched by telecom companies. And what is common to that is that it is financial services, payment services, or transfer services, financial transfer services, which are available even to the poorest people, as long as they have at least a mobile phone. And mobile phones, this is not very well known in more mature economies, but mobile phone is extremely well distributed in the developing world. And this is a chance for financial inclusion, because it gives an access device to the payment systems. And even before we speak about CBDC, it is fair to recognize that financial inclusion is on the move. The discussions I have with ConsenSys has led me to the idea that the CBDC can bring an additional value to what is already being done in Africa and elsewhere with mobile money. That is to say, some people say, why do you want to change something which is working and making so much progress in financial inclusion? And we don't want to change what exists. What exists, in particular, the infrastructure which has been set up by telecom companies, is extremely valuable. And I think central banks should be willing to keep this infrastructure. The only thing is that, and the only point that we are making, is to say, with the mobile money schemes as they exist today, what is moved is a money which is created by telecom companies. And instead of that, we say, let's keep the same infrastructure. Let's not touch anything. Let's keep the mobile phone, the agents, everything of the infrastructure, but just change one thing, which is the money which is moved, and have it be money issued by central banks rather than by telecom companies. In other words, what we are aiming at is a partnership between central banks and telecom companies to foster financial inclusion in Africa and elsewhere.
So, Jean-Michel, please explain to everybody, because people always ask the same question. What's the big deal about CBDCs? Why are they superior in nature to a mobile money issued by a telco?
I think let's say, I don't want to say that mobile money is not safe, but, and I think mobile money is safe, but CBDC is safer. And that's very simple to understand. What makes mobile money safe is that it is backed by, typically it is backed by money, by bank money. The telecom company are compelled by regulation to keep a reserve of bank money. And bank money is safe because it is backed by central bank money. But if there is a problem with the telecom company, or if there is a problem with the bank, which is safekeeping the reserve of the mobile money scheme, then there is a problem for the individuals who are holding the money. And these individuals are poor, and these schemes are not backed by any deposit insurance. So this is why, in the end, we say, let's make this arrangement safer and have directly money backed by the central bank. I mean, central bank may fail, but it's extremely rare. Sometimes you have countries who are almost broke, but the central bank is still there. So I would not say central bank is never going bankrupt. There are some examples in history, but very rarely. The central bank, the money issued by the central bank is the safest form of money. And that's why we think it should be.
I agree. However, as you know, not everybody trusts governments. In particular, the biggest concern is privacy. So how are we going to deal with this issue of privacy?
I think it will, let's be clear, privacy is a problem not just with central bank money. Privacy is a problem with any form of money, except to have banknotes. But any form of cashless money is subject to central bank scrutiny. Not just central bank, but authorities scrutiny. And maybe the central bank will be, I mean, it will of course depend on every country, but I think the central banks will request that there are some guarantees about privacy, especially because we are here speaking about financial inclusion. And financial inclusion, we are dealing with very small amounts. In principle, there are regulations which force compliance with the necessity to fight against money laundering and the financing of terrorism. But there is a possibility for wallets, accounts or wallets of very small amounts to be without these, outside of these requirements, as long as clearly the amounts are at stake are small enough not to be mixed with illegal activities. And therefore, there is a possibility to have CBDC accounts which are fully anonymous. This is what I think should be explored for financial inclusion. Let's be very clear that there will be no longer any cashless payments which will be fully anonymous. That will not happen. This is what happens for banknotes, but that will not happen again, except for very small amount. And that's what we are considering here. So for cost reasons, and also because this is not necessary for policy reasons, there is a chance that wallets, CBDC wallets can be issued, which are fully anonymous, but under a number of requirements. For example, amounts being, payments amounts being limited to a certain value, relatively low, the value of the wallets being relatively low also. But that should not be a problem if we really think about financial inclusion, that is to say, in particular, bringing the poorest part of the countries to the cashless payments business.
I agree. And would you say that that would also include that they shouldn't really be required to have a proof of address and even a document proving their own identity? Because as we know, there are many people in the world that don't have identities issued to them, and many of them live in shacks or the streets that they cannot prove where they live. So I would hope that that requirement will be relaxed.
I agree with you, because the luck we have is that even these people, typically they have a mobile phone.
Yeah,
exactly. And therefore, I mean, it has to be discussed how to do that. But we are speaking very often of amounts which are so low that honestly, I think that there must be discussions, of course, but the KYC, the Know Your Customer requirements could be lifted or reduced for very small amounts in view of the financial inclusion. And I see hope for that.
I agree. And my last question is, I also hope that when this gets implemented, that the bank charges, well, there won't be bank charges, but that the administrative cost of having a wallet for CBDC will be so low that for people that earn very little income, that it still makes sense for them to have this type of e-wallet.
Let's put it this way. Already now, I think the fact that we are in favor of CBDC should not hide the huge benefits which already exist with mobile money or branchless banking. And this business model works with very, very small fees.
Exactly.
And what we do hope is that if we use CBDC, especially CBDC, which is DLT based, there would be a possibility to even lower these costs. So again, the fact that mobile money exists today is a proof that something is possible with very low fees. And the challenge for us is to bring something which lowers even better these costs.
I agree. That should be top of mind, financial inclusion in every country in the world. And then the last question, which follows on the next panel, which is everybody asked the question, but can you have this type of e-wallet without having data or internet? Because not everybody has this. Is that practical, and how is that achieved? So maybe you can answer that question, because I think that's also a question that will be answered by the next panel.
Let's say I would prefer, I'm not a specialist of the technical aspects. I prefer to hear the answer of the next panel on this question. Very interesting.
So that's a perfect segue, because we ran out of time. Jean-Michel, thank you. Thank you so much. We can carry on for hours, but I'm going to leave it to Dunia now to take over. And thank you. It's been my pleasure.
Thank you, Monica. Thank you, Dunia.
Thank you.
Thank you. Thank you so much, both of us, for this really thoughtful introduction. Your insight on mobile money and CBDC as alternative for financial inclusion is definitely insightful. And thank you so much, Jean-Michel and Monica, to kickstart the session with these elements. We're gonna now move on into the second part of this webinar, and I would like to ask Shelly, Adeola, Catherine, Albi to turn on the camera, and hopefully I'm gonna also stop sharing, and you are all there. Amazing. Thank you so much for joining us, and I will let you, Shelly, take the mic, if I can say that, and
sure.
And the floor. Amazing. Thank you so much.
Thank you, and thanks to Jean-Michel and Monica for that fireside chat. Hi everyone, Shaylee Adenolfi with ConsenSys. I work on strategic sales here on central bank digital currencies, many payments use cases, digital assets, and so forth. Before we get into the panel, I wanted to quickly talk about some results from a survey we did of our wallet Metamask, which allows people to buy, store, send, and swap tokens. And it also, I think the larger picture of MetaMask that I find very hopeful is that it allows folks to own their own data, identity, and assets, which is very important for the financial inclusion space. There are over 5 million monthly active users, and of the survey respondents, there were 317 people across Nigeria, South Africa, Vietnam, India, the Philippines, Brazil, Colombia, Argentina, and Chile. So in Nigeria, 32% of the respondents said they used and owned crypto, and they heard about MetaMask from friends. They found it easy to use. They use it to achieve specific goals, like university tuition savings or buying property. One person responded saying that they find it better for savings because when they go to ATMs, they have police standing there and waiting to arrest people for no reason. So they found that it's safer to hold their money in a digital wallet. In the Philippines, 17% of internet users own or use crypto, which was an interesting, finding. And one of the survey respondents said that they like it because they can keep the profits and no one else is keeping the profits from their investments that they're making in crypto. They see it as an investment. They see one challenge as a lack of merchant acceptance of crypto, right? And we know we'll hear more about some merchant acceptance from Catherine today. So these are just some things. I think in South America we had respondents that said actually merchants are starting to accept crypto. So that was an interesting sign. It's early days, but these are the types of things we're seeing everywhere in the world. And I wanted to bring the panel here together to talk about their views and what they're experiencing in their work. So I will first ask the question, how has the financial experience changed in emerging markets over the past 5 years? And what is the best way to bridge those with access to underlying infrastructure and without? So maybe we can start with Adiola, and Adiola, you can introduce yourself before responding.
Thank you, Shaili. Good to be on the panel, talking about one of my favorite subjects. I think I'll start by answering that question by giving a data point. Electronic transactions in Nigeria, for example, at the moment is about $46 billion worth of it through the normal channel versus $500 million when it comes through to cash and checks. 10 years ago, it was the reverse. So that data kind of gives you an idea of what has happened over the last 10 years, where people didn't have access to electronic transactions or cards, to today that we're talking about cryptocurrencies. It's more than 40,000 fold in terms of the change in transactions in value. And I think your second question was how to bridge that. The best way to bridge it and to ensure that there is financial inclusion is the best way to bridge that is to use technology, because you have challenges on both sides. You have the user side, where you have challenges like the cost to access, as was mentioned by the previous speaker, and you have literacy issues. You still have about 20% illiteracy rates in most of the developing countries. And then you have the service provider side, that is financial institutions, and the cost to serve is one of the issues that you face, the lack of infrastructure and the lack of interoperability of the solutions that are provided. Those are the challenges. Now, the only way you can bridge that is to put the two pillars aside and say, how do you close that gap? And the best way to do that is technology. If you try to solve one end and you don't solve the other end, if you don't solve literacy issues, for example, you're still going to have the same challenge. If you solve literacy and cost of access issues, but you don't solve the infrastructure issues, then you're still going to have a challenge. So the best way then is to say, what brings these two sides into play in the most efficient way and the most optimal way, and that is by the use of technology that makes the link between the individual and the institutions.
Great, thank you. Aldi, did you want to add some thoughts from your experience?
Yeah, I think that, thank you, firstly, thank you for having me and ConsenSys for this amazing opportunity to share. In our perspective, digitalization, digital transformation came to stay, and more after the COVID pandemic, and digital wallet and digital identity, as Jean-Michel mentioned before, are key issue, are very relevant and enablers of the new financial experience. Running on the top, for example, just to put and to bring one example on the top of the underlying infrastructure, you can see relevant examples in cases like, for example, Colombia. In Colombia, a bank, a very friend of us in the IDB, Da Vivienda, they have a wallet, the digital wallet, DaviPlata is the name, is the brand. And with the use of DaviPlata in the middle of the pandemic, they offer the possibility to include more than 6 million of new clients in the system. This is amazing in a country with 51 million population. This is almost 12% of the population. Of course, going together with the government, because the cash transfer models are, very helpful. The last 20 years, financial inclusion has been based and have proved that cash transfer, conditional cash transfer program have been very relevant at the time to offer the financial services more to the population in the region. And this is a pretty good example that I think that can show that came to stay, and we have to work in this way with, like Adiola said, with technology and digital wallets.
Great, thanks. That's a good segue, the mention of DaviPlata to wallet providers. How are they positioning themselves in this digital currency race, so to speak? And how will it drive more efforts towards financial inclusion based on some of the offerings that you're seeing in the market? So I guess we could start with Catherine.
Sure. Thanks, Shaylee, for having me here. Definitely, I think, just financial inclusion is so important as of the current, age that we're living in. And I think one of the common theme, for example, like all the panelists have touched on, is really on that key on technology, because technology is really the way in terms of how we can shape the future and to be more inclusive and so on. So I think coming to the technology for the digital currency side, it definitely has a lot of potentials to extend the value of digital payments to a greater number of people and places, and especially in emerging and developing markets. And I think what's interesting, when we're looking at the digital wallet providers and so on, it's like the barrier to entry in building these digital mobile wallets these days is actually much lower, especially in a digital world. You're getting powered by these open source public blockchains, where there's a huge developer ecosystem who are all actively contributing towards this ecosystem. It's just really a lot of innovations, private sector sort of led, and it's great. And I think, in terms of from the Visa position, how we can help to help to support this sort of innovation and competition in the sector produced by the digital wallet providers and so on. A key area of focus for us is really to enable digital currency cash out to fiat for payments. And this is really, where, how we can let digital currencies in the future converted to a fiat and then be spent at any one of the 70 million Visa merchants that's out there. And currently we're working with about 50 digital currency platforms and wallet providers worldwide. And we really want to continue to expand that partnership through our, for example, the Fast Track program with digital wallet providers very closely.
Thank you. Adiola, Albi, do you want to chime in on this?
No, I just want to add that those new models based on self-sovereign identity, I think have shown to be very powerful at the time to use the verifier credential and allowing the possibility to manage digital currency, cryptocurrency at the same time. This is something that is happening. It's a transformative moment in the sector because, for example, for Know Your Customer certification could be useful too, which is something that it's mandatory when you are talking about financial services. And now, for example, in blockchain, we are a network. We're infrastructure. We have in Latin America working in 16 countries, but with ecosystem in 9 developing countries in 9 countries, and we already have 5 vendors, 5 wallet providers working with this specific model. That the pandemic, that the COVID-19 pandemic have been accelerating the adoption because it's the same model that is behind the certification that we're going to use at the time that we have to share to show that we are with the vaccinated program or vaccinated. And this is something that we have to take into consideration at the moment that we are living now.
Yeah, thank you. Adiola?
Well, I just wanted to say that I believe that digital currencies also drives financial inclusion by reducing the cost to serve as well as the cost to access. And also, when one looks at the use of digital currencies as they evolve, you get to a point that you could have digital currencies that does everything, including verifying your age before you can get into a pub, or it stores everything that you store in a physical wallet. So we're getting to that point. So the question is there are 2 questions then. How do we continue with the sophistication of the technology and the sophistication of the use of digital currencies, that it's not just in terms of money? I mean, digital wallets, it's not just in terms of money. You can use it for your health card, et cetera, et cetera. That's the first question. The second question is, as technology also becomes more sophisticated, you have the challenge of the non-financially included at the moment. And we don't seem to have that technology that they can adopt as easily as that. You and I can use credit cards or have access to internet or access to data, but some people find the cost of data quite expensive, and they're so remotely placed that they have zero access to internet. So as we get more and more sophisticated, how do we ensure that we don't even increase the gap between those people and the ones that we're leaping in terms of technology? So that's just going to continue to increase the gap and we leave more people behind. That's the question that I keep thinking, and that's one of the things we continue to try to solve. If time permits, I can tell you about more of the work that we're doing, but for now, I'll let it rest there.
Thank you. That's a good segue to kind of talking about those use cases that do make an impact, right? And what are you all seeing in terms of use cases utilizing digital currencies or central bank digital currencies, even if they're just in test form, or crypto or tokenized vouchers or whatever it is? What kind of use cases are you seeing that have that impact? I'll start with Albi.
Well, I mean, are several theoretically and practically. I mean, in the first one for us in Latin America are remittances. Remittances are very a source of income for several countries. I mean, countries like Mexico, for example, receiving each year trillions of dollars, coming from the Mexican that are living in US, or the case of Salvador. El Salvador is a country where more than the 30% of the GDP are coming from remittances. On the other side, you have the cross-border payment in general terms. I mean, the second powerful case in our perception for financial inclusion is connected with what the bank and the IDB have been supporting and backing in the last 20 years. That is conditional cash transfer program with government. Because when you have to automate something, when you have to program, you need to supervise several behaviors in the beneficiary population, group of population, when you are giving some aids. For example, if you are accomplish a vaccination program, or if you are finishing some level of education for your daughters or your sons, and the government maybe can help you with a small amount of money just to incentivize. Those programs have a huge, enormous supervision weight. I mean, a lot of bureaucracy has to be built on the top, and with the automation and with the possibility that programmable money, digital currency or digital money can bring, you can improve those process and give more transparency and fight against corruption in some cases. Because with a lot of supervision means that you have, in the public sector, you have corruption in every country, Latin America, Africa, Asia, whatever part of the world, if you are working with this kind of retail. I think that those are the two main for us in blockchain.
Catherine, what are you seeing?
Yeah, absolutely. Let me go straight into one of the really interesting use case, which is actually on offline capabilities. So I think this is something that Monica and Jean-Michel talked about just now. So actually, we published this technical research paper on central bank digital currencies, and under sort of a two-tier design infrastructure in which you have this close relationship between the public and the private sectors, what kind of interesting features you can provide. And one of the key areas that we first focused on under this two-tier design is really on the offline capabilities. Essentially, it's trying to change CBDC as almost a digital version of cash that you can be carried around in your mobile devices or any other devices that you have. And what that means is essentially, once you do have the offline capability being programmed into digital currencies, it can then be directly downloaded onto a personal device. And then it can be transacted between point to point, between two different devices in a secure way, without using any intermediary or internet connectivity. Now, I think that's actually a very interesting point, because if you look at countries where there's a lot of regions which have very limited or unreliable connectivities from time to time, imagine that, I have to go to a internet cafe to, get that access to internet, and it's very consuming. So what are the options for me right now? Really, it's the physical cash, which is kind of the dominant way for payments. But in the future, it doesn't have to be that way. As long as you have a basic, say, a model of mobile phone that supports this sort of technology going forward, you can easily just download it onto your mobile phone. And for the duration that you stay technically offline, you can just use that to pay people, continue your day-to-day activities, and let the business to keep growing and stuff. So that's a really interesting aspect. And I think that kind of revert back to the overall sort of discussion about, the technology behind CBDC or stable coins and just digital currency in general, because really, I think the way we see it is that it represents a new form factor of money, represents a technology. It's not necessarily a new type of money in itself. It's just technology helped to improve the access and the cost of transactions and all of that Adiola was touching on. And I think, in the future, if you're looking at the ways that programmable money can really help to drive changes in our lives and make it more accessible and inclusive, I think there's just huge space in this area that people are innovating.
Absolutely.
Can I add?
Yes, sure, please.
I think one of the biggest things that we seem to miss is the cost of printing money. The more digital you go, the less that you have to worry about recycling money. And one of the estimates in the research we did shows that over 3 years or so, over 5 years, you can reduce the cost of printing money by 50%. With the cost of inflation, what typically happens sometimes is that the cost of printing some denominations is actually higher than the denomination itself. So let's say the cost of printing $1 is $1.20. So the intrinsic value is less than the value of that currency is less than the intrinsic value. So I think that's an obvious case or use case for digital currencies that we all miss from the regulator's perspective. Catherine talked about programmable money, but you can do a lot more with programmable money. When it comes to grants, I think Albie mentioned grants earlier. When it comes to grants, you can program that money to even specify what the digital currency or the digital money can be used for. So if you give a grant and you say it's only for food and groceries, not for alcohol, it will be difficult for you to then have the beneficiary to walk into a store and use it to buy whiskey. So that just imagination. I mean, the more that you think about it, the more that you realize the flexibility and the efficiencies that are brought in by digital currencies. And of course, from the government side, it's the convergence of fiscal as well as monetary policies, because right now you have sometimes a disconnect between fiscal policies in some of the emerging countries, even developed countries, as well as the monetary policies. So you have fiscal going this way, expanding money, and you have monetary policies trying to reduce the money that is in the economy. But with digital currencies, you can ensure that there is a convergence in those two policies by just programming it into the currency. On mobile phones, Catherine's example of using mobile phones, technology exists, and I did mention earlier that we were working on technology that allows a bank to walk into anybody. Basically, an individual becomes an account, and an individual can be a bank at the same time using biometrics. So it takes away a lot of the barriers that are in place on both sides. Infrastructure and cost to serve is reduced by using a device as the bank, and the cost to access is also reduced significantly because you need biometrics, you don't need literacy to do the transactions, deposit, pay, or transfer funds. And you also reduce the cost because it's a device that can be used by multiple people, and it's a very mobile device. So those are things that I would just like to add in terms of use cases.
Great, thank you. And what are some of the challenges that you are seeing from the user's perspective? You've listed some of them before, but if you could each kind of briefly talk about some of the challenges.
Hello.
We'll start with Albie, actually.
Yeah, I think that the main challenge for the user experience perspective, one is the environment and for usability. I mean, the possibility to use the technology, to use those new ways to exchange value. Of course, that the regulation in terms of the clear understanding in the regulator's mind. I mean the clear understanding. What do you have in front? The difference that you have when you're talking about when CBDC another kind of stable coin or token or one cryptocurrency. Okay, but I mean, the most clear is something that Adiola mentioned in one way, which is the literacy and the communication. I mean, we used to talk about wallets, okay? And I would say something funny. We used to talk about wallet because digital wallets, because we imagine that everyone has a wallet. But in Latin America, in some rural areas and poor areas, the people people don't have wallet. I mean, this is something that cannot, this easy way to use the term. And I prefer to talk about one application that can help you to do something that is easy because they already use another application like WhatsApp or whatever. And the point is, or Facebook or other, centralized or not. But the point is that the education, the communication, the words that we are using with the specific sector that we pretend to help. If we pretend to help, the poverty area, we have to understand the elements and the situation. Of course, a lot of guys coming from another countries could be helpful to use the terms wallet. It's something, an example is, but the communication, regulation, and the possibility to have a clear environment for usability and exchange of value.
Thank you. Catherine, do you have any user challenges?
Yeah, like I think kind of focusing on that, what Albie was building on, which is kind of like, you really need to spend a lot of time educating people and to have that familiarity, because if you don't have the trust in the technology, you would never really adopt that later on. And I think that's a really key point, especially when it comes to digital currencies and CBDC. And I think I would just summarize all of that to be having a consumer first approach, because the thing is, in a lot of the cases, the way we spend money right now is good. And, like, so that if CBDC or, other form factors of money is going to come in the future, you have to be at least as good as what we have now. So I think there's a lot of expectations coming from the consumer and businesses, kind of expecting all these best-in-class security and comfort and, things like protections and so on. So how do we really create an ecosystem which is just as good, if not better, for these people? And I think also the other thing I think is that actually when we look at the UX, right, we want to be as good as what we currently have. And if you're looking at blockchain is more like a back-end infrastructure technology. So I would say that the magic happens at the back end. Consumer not necessarily know that you're using a new different type of technology to transact. But what they do realize is maybe in the future, the cost of transaction is even lower than what they have today. And that's achieved because of a better technology to drive, scalability and international interoperabilities and stuff like that.
Well said. Adiola, you want to add to this?
Yeah, I always have a lot to say. Yes, I think in addition to what Albie and Catherine mentioned, I had talked about infrastructure deficits and the cost to serve. And the two things that I would like to talk about are first, interoperability, because using mobile money, for example, if I'm on a network, I can only do transactions with that network's mobile money. I can transfer from, let's say, Vodafone or Vodacom to, let's say, an Airtel. I can't do that. And that is one of the challenges. The other thing that we need to take into consideration is, which is much of a bigger issue, and that is global payment systems. There is already a system in place. As different countries continue to adopt CBDCs or digital currencies, how does one have, I know that some people will say, yeah, we want to go away from standardization, but at the same time, in terms of global movement of goods and money, there's got to be some kind of agreed either technology or system in place that allows that ease of global trade, because that's important. The world will be nowhere without global trade or without global commerce. So those are two things that I see as challenges, two big things that have not been talked about earlier.
Fantastic.
Shelly, if you allow me.
Yeah, please.
You said, Adiola, you said something very, very relevant. Actually, when we were talking about the use cases, I recommend to follow, the news that we watched 3 weeks ago with the Bank of England, the Bank of England and the Finality Project, the publication of the new regulation about the omnibus accounts that allow the settlement and liquidity network. This is something very powerful. I think that is tremendous, because it's the possibility to bring the technology for settlement and the management of liquidity for international payment as using DLT, like Jean-Michel mentioned, connecting central banks and with commercial banks. Of course, there is a wholesale level, but if you don't have a wholesale level, it would be very difficult to have a retail level, like you said, and we will be in front of those problems with the interoperability that we are watching in the crypto space, in the specific area, in specific areas in crypto space, and in other areas like you said, different countries, etc. And this is something very relevant. And Adara, which is one of ConsenSys companies or backed by ConsenSys, are playing a relevant role in Finality Project with this settlement and liquidity network that they are building, that I recommend to follow. Finality International.
Thank you, Albi. I'm going to skip the last question because we have 5 minutes left, and I do want to get to a few questions here. One of them was on how will interoperability work between all of the different networks. This seems like a critical issue. I have my perspective. We are already testing cross-protocol bridges at ConsenSys as a part of CBDC projects. We have tested hash time lock contracts, and we are looking at different types of interoperability solutions. But I would love to hear what your thoughts are, if anybody has something to say from the panel.
Yeah, I mean, I can kick off that, because this is definitely a very exciting area in the blockchain community right now. Like all these layer 2 solutions that is kind of coming out, and the projects, and they're gaining a lot of momentum. You see how much money is being sort of transacted already on these networks. It's very interesting. I think it touches on both an issue of scalability as well as interoperability. And when we talk about interoperability, I think there's several pieces to think about. So if you're looking purely within the blockchain world, it's really that interoperability between different DLT networks, which in itself is a technology thing. How do you build different bridges and stuff to communicate and transact? Now, if you take a step back outside the crypto world, you have all these fiat currencies, which is going side by side. And how do you then settle between the fiat and then the crypto? That is another very challenging piece. And I think from both a global standards perspective as well as individual companies, everyone I think is doing a lot of work already to think about that from a settlement perspective. And for example, we have already started to experimenting with USDC settlement, as you see in the announcement before. That's kind of really focusing on just upgrading our treasury system to then be able to accept a new form factor of money. So I think this interoperability is super important. And if you're looking at central banks, by the way, they're also doing very cool and innovative things as well. I read this report on Project Jasper, and they're using HTLC technology to do cross-border transactions. So I think there's going to be a lot of new sort of technology injected from all the private sector sort of innovations and back to CBDC experimentation going forward. So.
Great. One more question. I think we only have time for one more. I would imagine CBDCs have the same AML KYC requirements as legacy systems, given the assumption. How does CBDC actually benefit users who do not have those documents readily available? And this was something Jean-Michel and Monica touched on before. But Adiola, what do you see in terms of KYC for digital currencies?
Sorry, Shaili, I didn't hear your question. There was a bit of background noise.
Oh yeah, no worries. Just that, what will KYC and AML look like for CBDCs?
Oh, I think Jean-Michel did mention it. There are two ways of looking at it. One is, look, if we're talking about financial inclusion, you can have a KYC AML light. I'm not saying do it, do away with it totally. And then you can have your full KYC AML depending on the value of transactions. Now, what do I mean by KYC light? Let me use an example. A full KYC will require 10 fingerprints, I think 442, 10 fingerprints, your address and your biometrics, your picture. That will, and probably your other personal data that you provide. A light, and then that all goes into a database. A light KYC might require 2 fingerprints, which still allows you to match the person. A light KYC might not need a picture, for example, and a light KYC can be done with the registration, the geolocation of where the person did his registration or where they do the most transactions from. So that you don't have to put in a whole suite of information, but you still have enough information to be able to track the person, knowing that the risk based on the value parameter is not as big, it's minimal actually. So that's my own view of how, so it's two ways, it's making it light and also just providing minimal information based on value.
Great. I believe we are at time. So I wanted to thank our panelists very much for participating and the audience. I'm sorry we couldn't get to more questions. I'll pass it over to Dunia.
Thank you so much, Shelly, and what a really interesting panel. We definitely felt the fire and really high level engagement of all of you. So thank you so much. I need to admit, like, all the questions raised also from the attendees are quite great. So what we're gonna do is to try to write maybe like a sum up of the session here. Highlight the takeaways and try to answer all the questions, because quite frankly there are like at least 10 questions we really need to answer. So we'll follow up like with maybe an article in the following weeks. So thank you so much for that. And yeah, and I'm really looking forward to what's next. The recording is going to be sent again, as I told you at the beginning of the webinar. And Jean-Michel, Monica, Shelly, Albi, Catherine, Adeola, thank you so much. And see you soon.
Thank you very much.
Thank you. Thank you very much for the opportunity. Bye.
Thank you. Bye.